Aston Martin fell to a loss of over £100 million today as the luxury car maker announced it would use 2020 to reset the business in order to compete in the supercar market. The firm said that the release of the new DBX and Valkyrie models, which is scheduled for the summer, would be critical to fulfilling this goal. Read more. Aston Martin shares leap as Lawrence Stroll leads rescue. DealIt was also announced that finance chief Mark Wilson would step down no later than the 30th of April. The figures Aston Martin fell to a £104.3 million loss before tax, widening from last year's £68.2 million drop as the firm continues to battle an adverse market for luxury cars. Revenue fell 9% to £997.3 million, down from £1.1 billion in 2018, which the firm said was due to a decline in sales to dealers, which fell 9% as well. The company's net debt also swelled from £559.5 million in 2018 to £876.2 million today. Earnings per share fell to minus 32.1p, nearly a 60p swing from 2018's results.Why. It's interesting Aston Martin, which has been mired in difficulty for over a year, today warned that the number of car sales will be lower in 2020 than in 2019 as the iconic British brand tries to reduce dealer inventories to a normal level for a luxury carmaker. The firm hit trouble almost as soon as the luxury carmaker listed in October 2018, with its share price declining from almost 1,900p to a little over 380p. Today.Sign up to City A.M.'s Midday update newsletter, delivered to your inbox every lunchtime. In January, the firm issued a profit warning, saying that annual core profit could halve as European sales weakened over its peak Christmas period. The struggling manufacturer told investors that annual earnings before interest, tax, depreciation and amortisation, Ebitda, will sink to between £130 million and £140 million. This is as much as a 47% drop compared to the £247.3 million it earned the previous year. Although shareholders were buoyed last month when it was announced that Canadian billionaire Lawrence Stroll would take a 20% stake in the ailing carmaker, the road ahead for Aston Martin is expected to be long and challenging. Stroll's stake, which will be worth £182 million, is part of a £500 million funding raise which will include a rights issue from major shareholders. Stroll will join the board of the carmaker as chairman, with incumbent Penny Hughes stepping down. The deal included a £55.5 million short-term working capital loan, but analysts are skeptical whether this will be enough. What Aston Martin said. Andy Palmer, chief executive and president, said, 2019 was an extremely challenging period for the company. While retail sales grew, we were unable to generate the revenue and profits we had originally planned and today report a 9% year-on-year revenue decline alongside an operating loss of £37 million. Read more. Aston Martin shares fall as it warns annual profit will halve. We have revised our business plan to reset, stabilize and for more on this story, visit the news article link.